Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Kickstart video. Today's date is March 20th, 2024. I think it's the beginning of spring today, at least in the Northern Hemisphere, and so happy spring to everybody out there. The US dollar is moving well higher versus yen, and also higher versus both the euro and sterling. In the Kickstart video, I take a look at those three currency pairs to get your day started. So let's get started. Looking at the euro versus US dollar, the price yesterday came down and tested this green line right here, also the 50% midpoint of the move up from this low to this high right here. All those two levels came in at 1.08374, and as you can see, the low price fell a little bit below that level, maybe about 3, 4, or 5 pips before rotating back to the upside. That move back to the upside came up to this swing area right through here, which had a swing high here, broke above it here and failed, and then moved above it and used that level as support here and here and here and here, and then it came up to that level yesterday and found resistance level against it going into the close. In trading here today, the price low initially moved down, tested the 100-day moving average right here, and then moved up and got above that swing area at 1.0865. but it found resistance against a broken 38.2% retracement in the same move up from this low to this high. Sellers entered, and once we fell back below the 1.80865 level and then below the 100-day moving average here, we saw increased momentum to the downside. And where did we go? We went right back down to the 50% retracement and 200-day moving average. So I see the pattern. It's going in between technical levels. I guess on the high side, maybe getting up to 38.2% retracement was a little bit more than I expected, but nevertheless, it was a technical level. The 100-day moving average is obviously in play, and this 200-day moving average 50% retracement is also in play. So keep those levels in mind. If we do break below the 200-day moving average, it should open the door for further selling in this pair, maybe down toward the 61.8% retracement. If we do hold support like we are right here, the dip buyers right here would like to see the price move back up toward the 100-day moving average so they can make a decision at that time what to do there. Or at least you get the move up. If price were to, for those buyers down here, it would go below the 100-day moving average, I think they would get out and would push the price to the downside. So that's what we're dealing with now, but the technicals are certainly driving the pair. Let's take a look at the dollar versus yen. And wow, look at this move to the upside. And this came after the Bank of Japan actually tightened rates for the first time in 17 years, or increased rates for the first time in 17 years. The price of the dollar yen moved higher, the yen moved lower, and in trading yesterday we moved a little bit above the swing highs from 2024 through here, and then backed off into this swing area here, a number of different swing highs forming this ceiling here before rebounding to the upside in the Asian session and running higher. We reached a high of 151.74 in trading here today. That got within about 15 pips of the 2024 high price of 151.90. And if you go back in time and take a look at the 2022 high, that high came in at 151.94. Well, this is 91 and this is 94, so double top up here. By the way, what do these two highs represent? The highest level going back to 1990. 1990, folks. I was still a young man at that point. So getting above that level would certainly be something that would increase the bullish bias here for the dollar versus yen, even though it's pretty bullish as it is. This level may be a tougher nut to crack as a result of that multi-decade high for the dollar versus yen. At least traders will lean against that level with a stop above it. That's what traders who focus on risk tend to do. Just for giggles, looking at the 5-minute chart here, you can see how over the last 2 days the price has trended above the 100 bar moving average on the 5-minute chart. Yes, in the early Asian session today, we did dip a little bit below that level while we tested the 100-day moving average. Remember that, and then based and moved higher. And this little correction right here found support against the 100 bar moving average. So if you want to find a close risk level, or a level that if you think the market is overbought, maybe you can try to sell. Wait until the price moves below the 100 bar moving average at 151.55.9 and moving higher. If it moves below that level and stays below that level, then we look toward the 200 bar moving average to help confirm the bears are trying to take more control. So these two levels would be key in the short term for traders in the dollar versus yen, just because we've been following along that level, and markets tend to jump on that idea because risk can be defined and limited against that level, and the barometer for more bullish above, more bearish below is also used. Those moving averages can be used as that barometer. So be aware, be prepared, but that's how I see the dollar versus yen. Finally, let's take a look at the sterling versus US dollar. We had UK inflation data, which came in a little bit weaker than expected and helped to push the pair to the downside. That move to the downside was helped by the inability to get above this swing area, and also this blue line. This blue line represents the 100 bar moving average on the 4-hour chart, but it also is within this swing area through here, where the market had different swing lows and highs, or lows, lows. Gets a little messy here as a 100 bar moving average gets up, or you did find resistance against the levels through here in trading yesterday. And it was true in trading here today with adding the 100 bar moving average on the 4-hour chart in play. Note here that this other blue line is now equal to that 100 bar moving average. This blue line represents the 100-hour moving average. So 100-hour moving average, 100 bar moving average on the 4-hour chart all both come in at 1.27308. Just keep that level in mind, but obviously we're down here, and we're looking instead more toward the 200 bar moving average in trading yesterday. Like in the euro versus US dollar, we dipped a little bit below the moving average here before basing and rotating back up to the 100 bar moving average, and in trading here today, we're moving back down toward that 200 bar moving average. So getting below this level right here, 126.72, is now needed to increase the bearish bias for this pair. Close risk will come again to 61.8%, the broken 61.8% retracement of the move up from this low right here to this high right here. That level comes in at 127.113. Stable below that level is more bearish. We tried to hold it here and here earlier today, and then broke below it here, but move above it, and we could see a rotation back toward these dual moving averages up here. So that's how I see that pair, and that's how I see the three major currency pairs in the Kickstart video this morning. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.